Wednesday, December 6th, market analysis. Stan Ehrlich, good morning. 9:48 California time, right about the middle of the trading day for Californians, 6:30 to 1 o'clock for stocks, and who knows what for futures and forex, etc. A lot longer time frames. Now, I always start out with the indexes, typically the E-mini. This is the Christmas contract E-mini, December 23. We are currently approximately unchanged, and I'm judging off of the Spider, which is down 49 cents at the moment, slightly lower for the day. And you could say the same for the E-mini, which is actually up about 3 ticks, but it's delayed data for the moment. Here's the thing. We got over 2 weeks ago up into this resistance area and in overbought conditions. And for all practical purposes, the move up stopped. The highs got a little bit higher now and then. 4 days ago, popped through the top of the resistance area, which is in red, but closed at the top. And I've had that resistance area on this chart for, I don't know, months probably, at least a couple. Now, it still has been overbought until yesterday. And today, it's not overbought, which kind of gives it a little more leeway to work its way higher, which I don't think it's going to do. I would love to see this market get below yesterday's low, which would almost assuredly be below Monday's low. And then it's automatically below Friday of last week and very, very close to that little blue line, which is the last vestige of support close by. So getting below the blue line is really what I want on a closing basis. And if it happens today, you're going to get a red bearish engulfing ER sell signal, very much like the 3 that we got at the top of the market back there. And yes, I'm claiming that it'll be very similar and go straight down. And it went down for 2 or 3 weeks on that last signal, which was on July 27th, the one that was the highest high. Now, I'm not going to get the highest high here if it gets lower than yesterday's low. That's all I need. If it gets lower than yesterday's low, it's probably going to get below Monday also, and we're on our way, more likely than not. So a new short sell stop below yesterday's low might be a consideration to get short. Next chart. And I am looking for a move down to approximately 442.26. Why? Well, it's a very good support area. I'll put a zone in there in the next day or two. And if we start going down, of course. And I am going to show you the details on the Santa Claus rally coming up a few days before Christmas. And I goofed. I'm going to have to load that chart real quickly right now. There we go. So we will get to this in a few moments. And here it is. But I know that it's going to take a few moments for it to get loaded. So I'm going to change back to our index page. There we go. Index page. Good. Thank you for being patient. So I'm looking for a reversal. I'm looking for the beginning of a down move. I really haven't got what I want yet. It has been 2 weeks. Next chart. Spider. S&P 500, basically the same. Higher high than yesterday. Was overbought 3 days ago. That's good enough. If we get down below yesterday's low, it'll turn red. It'll be a bearish signal, much like the top of the market, July 27th. Great sell signal. I expect it to come down at least as low as this support area, and that would be down, I think it was a 444. My cursor's not coming back quite yet. It's doing a lot of calculation on that Santa Claus rally chart, which I just loaded. That's okay. Really, I want it to come down a little bit more than that to about 438. There we go. And I should get a crosshair back in a moment. Sorry for this delay. I'll have to remember to load that chart before I start my YouTube next time. So I am looking for a move down to 438 really, but any significant move down, and since I've got support areas and gaps to close, I might as well use those, there's my crosshair, as reasons to dictate, so to speak, a price level I think it's going to get to. And again, 438.5 is very, very possible. Also, at least 441.30. That's the number I wanted. Next chart. This is the 1 minute S&P 500. It just made a new low for the day. We're getting lower and lower. And here is yesterday's data in white. That's the low of yesterday. And you can see it's just a little bit above the low of Monday. So we start getting below, I think actually the number is going to be 455.20, and that's less than a point from here. Then we're going to start dropping faster and quicker, I think. Next chart. The DIA is a bit of a different story, but essentially the same thing. I think it's topping out. It's a new high ground, but it's a new high ground today, overbought today, and it has a very tiny gap to close down here at 356. So that's my first objective. Frankly, I think that's easily going to be reached. And I'm looking really for probably 344 on the downside just before Christmas. You got 2 weeks to go. Next, the Russell 2000 is lower on the day, is not lower on the day yet, but after a higher high, you now could also have, in all of the examples I've shown you so far, except the 1 minute chart, a bearish red ER sell signal that could be extremely profound, create the beginning of at least a 2 week break. I don't really want it more than 2 weeks. 2 weeks is perfect because of the Santa Claus rally usually starts within 1, 2, or 3 days before Christmas. So that would fit perfectly. And that's exactly what I'm forecasting for the moment. Next, Qs. No new highs. And you'll look at the NASDAQ futures in a moment. But it is already lower on the day by a slight bit, down 61 cents. We're down almost the same 60 cents on the spider at the moment. And the DIA is about to turn red, it looks like. It's only up 5 ticks, nothing. Okay, keep your eyes on these numbers up here. If they're getting bigger and more south, more down on the day, more negative, that's what I want. So I'm looking for the Qs to come down probably to the ballpark of 363 and maybe a little lower. There's a trend line to deal with, but that's going to be at about the same price in a week or two anyway. Next is the NASDAQ futures contract, NQ, same as the QQQ. Got overbought. It did have a sell signal, didn't work, right in the middle of the top so far, the top. And it has made new lows for a couple of weeks, 2 days ago, Monday. So it sort of is already on the way down. I just need to have it continue to start closing lower and making new lows. That's it for the stock market indexes. Futures. Started out in the futures industry in 1971 as a runner on the Mercantile Exchange in Chicago. E-mini, different perspective. Christmas E-mini contract, it's actually the perpetual or continuation contract. They're the same thing. And it's in resistance. It was overbought. I think it's starting to head south. And I do think it's going to come down probably in the ballpark of 50%, maybe 40% of this last big rally, which started on October 27th. Yeah, so it's a little over a month's worth of rally. New lows while we're talking. Minor new lows. That's good. Come on down. Next, we're looking at the NASDAQ. I showed you this chart already. Different perspective. I think it's going to come down probably to about the top of this old pennant formation that it had. Bonds. Now they're overbought, finally. We are still in this bond trade. This bond trade has been great for us. We got long 2 days after the green bullish engulfing buy signal at the bottom of the bond market. We also had a red signal almost on the exact high day. This buy signal worked for a couple of days, but we were already short, so we don't take a trade, excuse me, unless we're stopped out of a previous trade. So we're in that trade, and it lasted all the way until October 10th. Now we're long from the signal on October 20th and bought into the trade on the 25th at a price of about 108.26. And we're 120.19 last trade. A whopper, really good one. Like the last one was huge. My trading system also scalps for every time you see red or green bars. It also is position trades, which you're looking at on the screen. So the position trades make usually a lot more money. The scalps, of course, don't have enough time to make this kind of money. Okay, we're overbought. We're about to head south. That's going to help the stock indexes head south. I expect. I think the bonds have already rallied up to and now higher than I was talking about weeks ago, back when I first got this buy signal. How far up can it go? Well, it just did it yesterday and today. So now we're bumping against different levels of resistance, and maybe one of them, or maybe someplace else, is going to turn the market back down again real soon. When you're overbought, usually it doesn't take but a couple of days for it to start to go in the opposite direction. Next chart, 10-year notes, same story. Barely above resistance, still in a long trade on the 10-year notes from the bottom of the market. Let me stop that. I got to do this. Okay, good. All right, perfect. So buy signal on the bottom, basically. It wasn't the lowest low, but almost. And doing fantastic. Plus the head and shoulder bottom. I told you about this before it finished, before it broke out, which was on the day of November 28th it broke out. We're half the way up to the minimum upside objective, which is approximately 112, but that could happen after Christmas. And it is possible for the stock market to go down, even though interest rates are stable or going down also, which the stock market usually takes as being bullish, rates going down. Anyway, things are working out at the moment fairly well. Next is the crude oil. Big down day in a support area and now oversold. It is about to turn back up, probably to a minimum of 74.16, and I certainly can't rule out 80 again. We're 69.5 at the moment, and there's nothing wrong with it slipping for another day or two to the bottom of this support area. But it's oversold now, and I'm looking right away, very soon, next few days, for a turn up. Next, same story for natural gas. Oversold for several days now. Not bottoming out yet, but this is a very bad place to go short. Never do that in oversold conditions. You're about to wake up the next morning with a lot higher market immediately and have a losing trade on your books in one day. Don't want that. Look for new sell signals after a rally, or look for a buy signal here to go long to take advantage of the rally. The trouble is it's a bear trend, and the market probably won't rally that much. I don't see any reason to scream bloody murder this is the bottom for the next year, for example. At least not yet. Next chart. Heating oil. Pretty much the same commentary. Oversold, a little bit below this support area, so it's breaking out to the downside. That doesn't mean it won't turn back up. It's just an area where it was a little more likely, and it did, 3 or 4 weeks ago, and it tried but didn't do it this time. Now oversold, looking for a rally in a bear trend. Don't think it's going to go very far back up again, but it should turn up a little bit very soon. Gold. I screamed bloody murder Monday with this huge ER bearish signal. It's a great one. This could go all the way down to 1850 again, where we got a bullish buy signal at the very bottom of the market. Now, ER1 is long for a scalp and a position trade on the day of the green. I'm not showing you the trade, but obviously it went straight up price-wise, and probably most of this rally we took out for the ER1 position trade. ER1 scalp looks like it maybe made a very small amount of money, not much. Here, The ER1 made more money on the scalp, but the position trade is about the same profit at the moment. Now, ER3 has one more day after today to get short, but it's way up here on that red dot to go short. And I doubt that it's going to rally that much, and we're going to miss the ER3 trade. But ER1 position should still be short. I'm looking for a big move down, at least to 1955 and a little bit lower, but I cannot again rule out gap closure way down here at 1876 to 1870 and even lower. Next, same commentary for silver, gigantic bearish engulfing, basically in a resistance area after making new highs for months and it didn't hold. Crash. Okay, a nice big profit on the scalp for ER1 on Monday, and the position trade is still short, and it is making another new low. Silver is coming down quicker and faster than the gold, which hasn't made a lower low yet. I went back to the gold chart, back to the silver chart. Doing great. How far down is it going to go? I think, my opinion, 22 and a half, and again, maybe to 21 and small change. Next, high-grade copper, platinum, sorry, had a bearish engulfing on Monday, but not a sell signal because it wasn't overbought. And it's coming down like I expected and said so yesterday and today, like silver. So only gold has got a little bit of a rally going at the moment. I'm thinking it's going to challenge the previous lows and probably get back into this red support area again. Next chart, high-grade copper. Same thing. Overbought, not quite resistance, turned down, down, and today down again. Going to come into the support area probably, and we'll see if it can hold at this last major low, 3.5. Next, soybeans. We were long. We got out a couple of days ago of our long from the bottom of the break on a green ER buy signal. We also have a sell signal at the top of the historic highs in the soybeans on July 27th. And we have other fantastic, there's a buy signal way over there on the edge on July 23. Rode that up pretty good, only half the big bull move. We got out a little too soon, but hey, a profit's a profit. That was a profitable trade. This was a profitable trade. We're out, we're flat, and I'm looking for the major support area possibly to get broken, but hey, we are oversold. This has got an RSI low today of 25.18, which is almost at 25 or lower. Super close. If it hit 25, and it still might, the price action will turn yellow, which is oversold officially with my strategy. And in a support area, that's a likely situation for a bounce. So I've got to expect a bounce. It's too close to being exactly what I want. I don't think the bounce is going to go very far, but it's a pretty important support area. If you break the lows that we made in October, we're going to probably go down to the lows that we made at 1088-ish. And that was the low that we made way back on May 31st, which, by the way, is the lowest low ever since February, the beginning of last year, not almost 2 years ago. This could be a gigantic long-term top, and I started talking about that possibility back in July. Go listen to my recordings. Next chart. Soybean oil. Kind of like beans. I think it's about to head south, break the support area, but we're kind of close to oversold, so a small bounce on a short-term basis would not be out of the question. We just had finished a couple of weeks ago, a great short sale, excellent trade. We'll see what happens next, but I have to be looking for a minor rally, but basically bearish. Next chart, soybean meal. Kind of like soybeans. Major broad double top. The last high was in March of this year. Now we have another high so far at almost the same price levels. And the lowest low is just Monday. Tuesday's low was almost exactly the same, and today is almost exactly the same. And we're currently a little lower on the day, but trying to bounce. I mean, the rally high was a new high for this week, but resistance. And that's now between the rock and the hard spot. I'm looking for lower levels, a minimum of 398, and probably down into this area of 370s, 360. Next chart. Corn has already been doing this long term. Let me pull this back together. But I got a buy signal. My system takes the signal automatically. I don't have to do anything. It bought corn on November 29th. We have been long for 1, 2, 3, 4, 5 days. Today's the first day down, and it was higher earlier. We did make a new high. We are still in this trade. Our stop is still below the market. We're still having a profitable trade. I see nothing wrong here. I'd rather it did not have a bearish engulfing, which it does not have. But if it makes new lows, it might have a bearish engulfing, and that means it's going to go down a little bit more. We may get stopped out of the corn with a small profit on this signal. But if it doesn't and stops going down now and then starts to head into new high ground, good. I'm looking for a rally up to, say, 99 or $5. Maybe, very possibly, 515, and I can't rule out higher, but I'm still bearish long term. Wheat, same story, but we got overbought on Monday and yesterday and today with new highs every day. New high closes Monday, Tuesday, and today so far. But now finally it's gotten up to my first significant resistance area, and maybe it'll still get up to 680. I'm still hanging on to a friendly opinion, but looking for sell signals because it's overbought. Now, this is a long-term bear trend, to say the least. And I'm very glad to say, and I keep repeating this because it's spectacular. We have a sell signal on the top of the wheat market on March 8th, which is the beginning of the war. After a series of limit up and locked, opened limit up, stayed limit up, locked limit up all day long, and closed limit up. For 1 day prior, 2 days prior, at least the close was 3 days higher limit up. 4 days later, earlier, limit up, close, and then we have some liquidity. Bad sell signal, but we didn't get hurt badly because we have a tight stop always. Next, live cattle. It's been zigzagging, stair-stepping its way down, and it just did it again. So I'm looking for maybe another bounce or stair-step, but the situation is a little different. We now have started to come back into pretty good support, and we do have a significant number of divergences. Look here. We have a low in the RSI, and then a higher low, and a higher low, and a higher low. That's a triple divergence. They're very rare. And the divergence is we have a low in price and then a lower low in price and another lower low and another lower low. At the same time, RSI is doing the opposite. That implies the market's going to start to work back up, but obviously it hasn't started to do it yet. Next chart. Hogs. Oversold, got a rally, almost to resistance. Now we're back in support, not near overbought. I think it's going to attack 65.75 and make new lows. And then we might be looking at 57.10. Next, OJ. I'll be doggone. We've got the top of the market the second time now, and it continues to trend lower, looking great. We have a new low and a possible new low close since our sell signal on the top of the market at the top of a channel on November 21. You can't get better than the top day to sell short and the bottom day to go long. Oh, I suppose you could sell short the high tick. I don't know anybody that does that very easily. Next, cocoa. Overbought, starting to slip. Probably has a little bit more slippage in mind. I'm not quite sure if we're going to get down to 3,765. It's not out of the question. I really don't have a strong opinion here. Wished I would have got a red sell signal on top, but we didn't get one. Next, coffee. A little bit of support starting to occur. I suppose it could easily drop off to 165. Don't have a real strong opinion. It did stop where I thought it might, in overbought condition, in a resistance area. That's great. So I'm still slightly bearish. But, you know, the trend is now having higher highs over a few months. And we'll see if these previous lows hold. And you might even draw a nice bull trend line under the bottoms that's probably still good. Next, so sugar. At the bottom of the support area that I've been talking about for months. Big, huge crash today. And in the last few days, it's come down a tremendous amount. Oversold substantially. Are we going to bounce from this price right here, right now? Maybe. I would get ready to be a buyer, but don't do it yet. Otherwise, if that support breaks and we start dribbling down here to 22 something, we're 23.34 momentarily, it could easily challenge 22.12, and then it's a free fall to at least 20 and a half and even lower. This could be a very broad, big top, something like soybeans, not quite the same. Next, cotton. Still bearish, but we're at support and we're trying to bounce. And I commented about that the last couple of days. Not very sure about cotton. Trend is short-term, intermediate-term bearish. And the major support area, which is held for a year plus, may hold again. It did at the beginning of November. I don't see why not. It hasn't really proven itself yet. Last couple of days. Next chart is back to the E-mini. We are now down only 50 cents on the spider, up a very small 11 ticks on the DIA, and only 66 ticks lower on the QQQ. So it's not heading down fast or a lot, which is what I want. You guys have a great day. Profitable trading to you. See you tomorrow.